Sometime in the next few weeks, if the reports are right, a company that did not exist 5 years ago will walk onto the public market and ask to be valued at $2 trillion. A higher valuation at listing than SpaceX, higher than Saudi Aramco, higher than any company has ever carried into a public offering. The company is Anthropic, the maker of Claude, the AI assistant. By its own preferred measure, its revenue has grown more than 10 times over the course of this year. In 2026 alone, investors have poured close to $100 billion into it. Now, according to the Financial Times, they expect it to list in October at $2 trillion or more. But this same company spent 18 days this summer with its best models switched off by order of its own government. Its Chinese rivals sell intelligence at a fraction of its price, and its customers have started asking what all of this costs. This is the story of the biggest listing ever attempted, and of the question every single buyer will have to answer before October. Is it worth it? January 2021. San Francisco. 7 people walk out of the most famous AI lab in the world. They were not junior staff. Dario Amodei ran research at OpenAI. His sister Daniela was an executive there. With them went the lead author of the GPT-3 paper and some of the field's best safety researchers. The reason, as Dario later put it, was a difference in vision. OpenAI had taken $1 billion from Microsoft and was racing to commercialize. The 7 wanted to build the same technology, more carefully. They called the new lab Anthropic. On paper, it was not even a normal company. A public benefit corporation, legally required to weigh the public good, with an independent trust holding power over its board. A safety lab, careful, deliberate, and for 2 years, hardly anyone outside the field noticed it. Then came Claude. While its rivals chased consumers, Anthropic went after businesses, law firms, banks, software companies. Today, roughly 80% of its revenue comes from enterprises, companies putting Claude to work. One product tells the story. Claude Code, its programming assistant, reached an annualized run rate of $2.5 billion within months. By spring, the number of customers spending over $1 million a year had doubled in under 2 months. Now watch the revenue. $10 million at the end of 2022, $1 billion in January 2025, $9 billion by that December. Then 2026, 14, 19 billion, 30 billion, and in May, past 47 billion. Annualized. That word matters. It is a pace, not a promise. Take the latest month of sales and multiply by 12, but investors told the Financial Times they expect that pace to reach 100 to 120 billion by the end of the year. Hold that curve in your mind. It is the entire case for $2 trillion. And every few months, someone handed the company more money at a higher price. $4 billion in 2023, $61 billion in early 2025, $183 by September, $380 in February, and in May 2026, $965 billion. That last round did something symbolic. It lifted Anthropic's valuation past OpenAI's for the first time. The careful lab had outgrown the company it walked out of. Where does all that money go? One word: compute. 5 gigawatts of capacity from Amazon, and a promise to spend over $100 billion on its cloud within 10 years. custom chips from Google, $30 billion of Microsoft's cloud. Now look closely at that list. The giants funding Anthropic are also its landlords, its suppliers, and its rivals. And this is why the IPO exists at all. Training frontier AI burns capital faster than any private investor can comfortably supply it. Eventually, there is one pool of capital deeper than all the private markets combined: the public. So 5 years after walking out of OpenAI, the 7 founders did what even the most careful lab eventually does when the bills grow large enough. They called Wall Street. June 1st, 2026. A short announcement. Anthropic has confidentially submitted a draft S-1, the registration paperwork for going public, to American regulators. Confidential means exactly that. The numbers go to the regulator. The public sees nothing until weeks before the shares are sold. The silence is not modesty. From the moment of that filing, securities law sharply limits what the company may say about the offering. 3 days later, Anthropic's president, Daniela Amadei, said the only thing she legally could. The filing, she said, gives us the option to go public. Nothing more. But the machine had started, and in August, the Financial Times told the world what the insiders were expecting. Half a dozen of Anthropic's own backers speaking to the FT. An October listing, $2 trillion or more. To understand that number, look at June. SpaceX went public at $135 a share, a valuation of $1.77 trillion. By the time the banks had exercised every option, it had raised nearly $86 billion, the largest listing in history by both price and money raised. Before that, the record had stood for years. Saudi Aramco in 2019, Alibaba in 2014. Records like this used to fall once a decade. Now, twice in 1 year, if October delivers. A $2 trillion debut would be the highest valuation ever placed on a company at listing. Whether it also raises the most money depends on one unknown: how much of itself Anthropic decides to sell. And here's the strangest part. The $2 trillion figure does not come from the company. Anthropic's executives have not set a valuation target even in private, according to the FT. The number comes from the investors themselves. They built their own models. One of them put the logic like this: if Anthropic is growing 800% a year, you would think at the incredibly low end they would trade at 30 times revenue. That would make them a $3 trillion company. There is no listed American company like Anthropic to check that math against. The closest things, data and AI companies like Palantir, have traded at roughly 55 times. By that yardstick, the investors will tell you $2 trillion is almost conservative. Who buys at a price like that? Eventually, almost everyone. A company this size becomes nearly impossible for passive money to ignore. As it enters the major stock indices, pension funds and retirement accounts will buy it automatically. Millions of people will come to own a piece of Anthropic without ever making the decision. The winners on listing day are already lined up. Google's and Amazon's stakes multiplied. The venture funds that wired money at a $4 billion valuation 3 years ago, and the 7 founders who were already billionaires on paper before the company was worth a tenth of this. And one winner is stranger than the rest. A name from an earlier story on this channel: Leopold Aschenbrenner. Forced to sell most of his $16 billion portfolio in July, kept his private holdings. The biggest piece was a reported $5 billion stake in Anthropic, now waiting on October, like everyone else. So the machine is built. The bankers are working. The winners are lined up. All that remains is the question that decides everything else. Is any company, this company, actually worth $2 trillion? Start with June. On June 12th, an order arrived from the American Commerce Department. Anthropic's two most advanced models, the family behind Claude, were to be cut off from all foreign nationals immediately. The company could not verify the nationality of every user on Earth, so it did the only thing it could. It switched its best models off, everywhere. For 18 days, the crown jewels of a $965 billion company were dark. Customers were spooked. Revenue growth slowed that month, before rebounding. The models came back at the end of June, but the scar remained. A single government order had switched off the product. The shutdown was one battle in a longer war. Anthropic had refused to remove its safeguards, the rules preventing its models from powering mass surveillance and fully autonomous weapons. In February, the administration ordered federal agencies to stop using it, and the Pentagon branded the company a supply chain risk. Anthropic did something almost no company does on the road to an IPO. It sued its own government. The case is still in court this month. The judge has grown skeptical of the government's position, but the designation stands. Every buyer in October inherits that fight. The second front is China. In July, Moonshot released a model that closed in on the best American systems at a fraction of the price. DeepSeek is close behind. The gap that justified premium pricing is narrowing by the month. And customers noticed. DoorDash now routes routine work to a Chinese model. Airbnb runs on one. Payment data shows businesses, quote, hitting their limit on AI spend. The era of unlimited budgets is ending just as the invoice for $2 trillion arrives. In July, the price war turned open. Anthropic launched a new flagship-class model at half its top model's price. 6 days later, OpenAI cut the price of its own fast model by 80%. This week, Anthropic quietly canceled a planned price increase. Blended token prices, the industry's raw material cost to customers, have fallen by roughly a fifth since mid-July. One industry buyer summarized the American strategy in a single line. The U.S. labs have cut the middle and are defending the top. Defending the top is expensive to watch. As of August, Anthropic's flagship model costs more than 2.5 times as much to use as OpenAI's. That premium is the entire bet that the best model on Earth can keep charging like it. There are older bills coming due as well. In July, a judge approved a $1.5 billion settlement with authors whose pirated books had been used to train Claude. The largest copyright settlement in American history. In an IPO prospectus, that is not a footnote, it is a risk chapter. And beneath it all, the quiet math. Annualized revenue is a pace, not profit. The company has committed over $100 billion to computing power. A $2 trillion price assumes years of near-flawless execution, while the price of what it sells keeps falling. The bulls are not blind to any of this. As one investor told the FT, it's easy to come up with challenges, but the company continues to be in first position in performance, positioning, and what people want exposure to. And the record backs them further than skeptics like to admit. even in the middle of the price war. Anthropic's share of American business spending grew last month. Both things are true at once. The fastest revenue ramp ever recorded, and the fastest eroding prices its industry has ever seen. $2 trillion is a bet that the first force outruns the second. Not this quarter. For years. And remember who ends up holding it. On listing day, the early money finally gets its exit. And the buying side is the public fund, index funds, pension savers, people who will own this company without ever having chosen it. Every story on this channel begins at a moment like this one. Maximum confidence, meeting the public market. Not all of those stories end the same way. Some end in legend, some end in court. October is weeks away. The public S1 will land first, the real numbers, at last. Then the roadshow, then a price, then a bell rings, and the world's savers vote. The careful lab that walked out of OpenAI 5 years ago will finally learn what the market believes care is worth. $2 trillion. Or not. The final price may land above $2 trillion, or below it. Either way, the answer is only weeks away.